Thank you, Jessica. I'm Jeanette Ward, and I'm here representing the Ashby Village Events Committee. I'm joined here by Judith Coates, Jessica Sterling, of course, and Sigrid Duisberg, who will be handling the questions as you put them in the chat. So here we are. Reverse mortgages have changed in recent years, and Rick Southern and our panel will discuss some of the scenarios that have helped older adults as they age in place. It's my pleasure to introduce Rick Southern. I've known him for a number of years. He's represented reverse mortgage information at the Village of the Coast Side in Half Moon Bay, which was the village that I was a part of before I moved here to Oakland. Rick grew up in Menlo Park, received his BA in economics from UC Santa Cruz, and has extensive postgraduate coursework. He worked in the computer industry and then transferred his skills to the mortgage industry, where he was originating reverse mortgages exclusively since 2013. He has a daughter finishing this year at Willamette University in Salem, Oregon, and spends much of his time now engaged in sports and physical activity, visiting his 95-year-old mom and tutoring a 7th grader with MS. While he is retiring from this industry, he stays up to date and generously offers his time and knowledge to help older adults understand the ins and outs of reverse mortgages. We'll also be hearing from 3 village panelists who have experience with reverse mortgages. From Ashby Village, we have Shirley Jowell and Judith Coates. And from Village of the Coast Side in Half Moon Bay, we'll hear from Terry Plank. So Rick, take it away.
Thank you very much, Jeanette. That bio reminded me a lot of stuff that I'd totally forgotten about myself. So I just want to be full disclosure, I'm totally retired from doing mortgages. I retired about a month ago because the broker that I work under got sick and needed to sort of close up shop. So I don't have any financial agenda in doing this. The only reason that I'm doing this is that I think that reverse mortgages have gotten a bad rap. There were certainly a lot of issues and problems with them that occurred before the big financial meltdown in 2009, but things have really changed a lot. And of the loans that I've done, well, 2013 onward, I don't think I've ever done a loan for anybody that had the remotest regret for having done the loan. Everybody's life had improved, and some people, one guy told me I'd actually saved his life. So I think it's something really important to understand, because I'm betting with 20 people on this call, there are probably some people that could benefit from having a reverse mortgage. So let's just launch into what is a reverse mortgage. Let's see. Share. Okay. Well, that didn't work so well. Let's try that again. New share. Okay, now we have to go backward. Okay, are you guys with me?
We're with you.
Oh, that's a relief. Okay, here we go. So, most of you probably know someone that has a reverse mortgage. There have been over 1 million reverse mortgages done in this country. And no surprise, the state with the most reverse mortgages is California. And part of that is because we have the most people, but probably on a per capita basis, it's true that we have the most mortgages as well. And that would probably be because of the housing prices are so high here, and so many people have their net worth tied up in their mortgages. So that's really what a reverse mortgage is. It's a way um, of converting the equity in your home to something financial that can benefit you. So what we're going to do is we're going to talk a little bit about what is a reverse mortgage, what are the requirements to get one. It's not all a bed of roses. There's some downsides to reverse mortgages. What the investment community thinks about reverse mortgages. There's been a big movement in the last 5 years or so with a lot of financial planners to think about how to incorporate a reverse mortgage in somebody's overall financial plan. So talk a little bit about that, and then I'll give you some examples of mortgages that I've done and what kind of people do reverse mortgages. So what is a reverse mortgage? It's a mortgage just like any other mortgage, but the purpose of it is to convert some of your home equity into a financial instrument that can help you, into cash, into income, into an equity line that you can tap into for future requirements. With reverse mortgages, you never make a payment. So if you have a $2 million house and you borrow $1 million, you get a check for $1 million, you never have to make a monthly payment on that. That sounds pretty good. But there is a hitch to that, and that is that you're always going to pay interest on what you borrow, and that interest is added to the principal. So your loan will actually get bigger with a reverse mortgage than smaller with a traditional mortgage. An interesting thing about reverse mortgages is that you can hold them, or you can have that loan on your property as long as you're in the property. So as an example, if you take out a mortgage today and you're 62 years old, and you live in that house until you're 92, that's 30 years, you never have to make a payment on that loan for 30 years. It only becomes due when you're no longer a resident of the property. Another difference between a reverse mortgage and a typical refinance is these are non-recourse loans. So what does that mean? It means that the only thing you're on the hook for is whatever your home is worth. So for an example, let's say that you have a $1 million home or $2 million home, and you take out a $1 million mortgage, reverse mortgage on that house, and an earthquake levels your house and all you have is rubble. Well, all the lender has to, as collateral is that rubble. You don't have to pay them back that money that's been borrowed. Whereas with a traditional refinance, that's not the case. So it's just kind of an interesting thing about reverse mortgages. Another thing where I think this is sort of pertinent is the lender never wants your loan to be bigger than the value of the house. Because if it is, they have to take the loss. You don't. And so they go through a formula based on your age and the value of your house to determine how much they will loan for you. And it also means that theoretically, you will always have equity in the house. Okay, does that make sense? They don't want your home to be worth less than their loan. So they calculate this in a way that you will always have equity in your house, which means that, if you want to leave something in your estate, you'll have home equity to do that. Another difference between regular loans and reverse mortgages is that this is kind of like, getting an AARP discount on a hotel. You are allowed to get a reverse mortgage if you're 55 years old, whereas, that's one of the requirements. It used to be 62, but there's a new category of loans out now that will allow you to be 55 years old. You also have to pass credit counseling. What credit counseling is before you can do a loan application, the government says that you need to spend time, this is typically like an hour telephone call, with an independent credit counselor to make sure that you understand what the reverse mortgage is all about, and in your particular case, how it might work for you. So one area this comes into play is timing is really important with a reverse mortgage. If it's something that you're considering, it's better to do it when you're clearly thinking than when you're not, because it becomes much more difficult if somebody loses the ability to understand what they're doing, if that makes sense. So just kind of reviewing the requirements for a reverse mortgage. You have to be of a certain age. You have to pass credit counseling. And I've never had anybody not pass credit counseling, so it's really not that hard to do. And you have to pass an easy financial assessment. I've never had anybody not pass the financial assessment, but the purpose of the financial assessment is to make sure that you will have the ability to pay your property taxes and your insurance if you take out a reverse mortgage. Okay. The other requirement of a reverse mortgage is that you have substantial equity in the house. Because what you're doing, as we said at the beginning, is you're converting your equity in the house into something financial, into cash or into an income stream. And without having sufficient equity, you don't have the equity to be able to do that. One myth that people have is that you have to completely own your house free and clear. You don't. A lot of people that do reverse mortgages have small loans on the house and are having more difficulty making monthly payments, so they take out a reverse mortgage to pay off the loan. I think reverse mortgages, well, mortgages can be very confusing. Reverse mortgages can be doubly confusing. So one way to understand how a reverse mortgage works is to compare it with a traditional mortgage. So in this particular case, if you take out a traditional mortgage of $100,000 and a reverse mortgage of $100,000, you're typically going to have a higher interest rate with a reverse mortgage than a regular mortgage. Why is that? Well, interest rates are determined by risk. This is whether you're doing a traditional mortgage or any other kind of mortgage. How much risk does the lender undertake in giving you a loan? And with a reverse mortgage, if you think about it, the lender may never see a dime of their loan for 5, 10, 15, 20, 25 years. A lot can happen at that time. So there really is a substantial risk that a lender undertakes when they do a reverse mortgage, and consequently, they are going to charge you a little higher interest rate. Another difference between traditional and reverse mortgage is what happens every month. With a traditional mortgage, you know, when you got your first mortgage on the house, it was probably a 30-year fixed, and every month you wrote a check, and your check contained a principal amount and an interest amount that made up the monthly payment. With a reverse mortgage, you keep your checkbook locked up in a drawer because you're never required to make a monthly payment. And the consequence of that with the traditional mortgage is that your principal amount decreases every year, and with a reverse mortgage, your principal amount increases every year. There's three ways that you can take your reverse mortgage disbursement. You can take it as an income stream. So I think, like Terry, when he's going to talk later on, we did a loan in January, and we set Terry up so that he has an income stream every month that supplements his Social Security. You can take your mortgage as a lump sum. There's another guy that we're going to look at in one of my examples who's a doctor in Portola Valley, and rather than an income stream, he wanted just a big chunk of money. So he got $1.7 million on the reverse mortgage and turned it over to his financial manager, and that just bolstered his savings. And the third way you can take it is as a credit line. So some of you have probably had experience going to the bank and getting an equity line to maybe take care of a remodel or household repairs. With a reverse mortgage, if you qualify for $1 million mortgage, for example, you could take that as a $1 million equity line and only pay interest on money that you take out of that line. So it's interest-free until you start borrowing from it. You can also set your mortgage up so that you have a combination of all three of those things. You can take some money up front for possibly repairs on the house, supplement your monthly income with an additional $1,000 or $2,000 every month in income, and have the rest remain as an equity line that you can draw on in the event of emergency. So there's a tremendous amount of flexibility with a reverse mortgage. Other differences with a reverse mortgage, there's an age requirement. There's a significant equity requirement. With a traditional loan, you can, for example, purchase a house with 3% down. If you only have 3% equity in your house, you're not going to get a reverse mortgage. Reverse mortgages are intended specifically for owner occupants of their primary residence. Okay, you can't do it on a second home. You can't do it on a rental property. You have to occupy the house. It has to be a 1 to 4 unit property. As mentioned before, when you have a regular loan, your principal balance will decrease every year. With a reverse mortgage, it increases every year. And finally, I think you do have some more stringent requirements for a reverse mortgage in terms of having an age requirement, having to reside in the property, but you also have a lot more flexibility. You think about it, you can get a big chunk of money or big income and never have to pay any monthly payments. You can take your mortgage as a lump sum, as an equity line. You can use a reverse mortgage to purchase a home. I'm not going to spend a lot of time on that, but for a lot of people, as they get older and they want to downsize and sell their home, instead of taking all the proceeds from the sale of the home to purchase a new home, they can take some of the proceeds and use a reverse mortgage and retain more of the savings that they have. Reverse mortgages don't have to be, but they can be expensive. And again, there's a couple reasons for that. One is because it is a riskier loan for a lender to do. Another reason is because they are non-recourse loans, and the government actually insures a lot of these loans through the FHA, such that if for whatever reason the loan at the time that the last borrower were to leave the house and the loan has to be repaid, if the loan was bigger than what could be obtained from selling the house, FHA steps in and pays the difference. So that's part of what makes them expensive, this FHA insurance component. Another downside is that with a traditional loan, when the borrowers are no longer alive, the loan stays with the house. So, you know, an heir could move into the house and continue to make those loan payments. With the reverse mortgage, there's what's called a due and sale trigger, where when the last remaining borrower passes away, the loan has to be paid off. And it can be paid off, you know, in a variety of different ways. It doesn't mean the house has to be sold, but generally that's what happens, is the house gets sold to pay off the loan. And just a reflection on the expense of doing the reverse mortgage and the and other options. I think a reverse mortgage is something that can really help a lot of people, but it really isn't for everybody. And one of your first options, if you do need funds, would be an equity line. If you can get a bank equity line, that is the cheapest way to get funds to, you know, take care of expenses. Reverse mortgages are really for people that can no longer qualify based on income, assets, and so forth for traditional mortgages. Okay, another risk I think with a reverse mortgage is the same thing that you could say about financial managers or regular loans or hard money loans or anything that has to do with money, is there are always people out there that are going to want to take advantage of you. And I think the panel will attest to this, but these are complicated enough instruments that it's really important that you deal with someone that's reputable and that's local, that you can sit down with face to face. A lot of reverse mortgages are done through telemarketers and through mail solicitations. And personally, I think that's a very bad idea. And then finally, you think about stories you've heard about people that win the lottery. You know, all of a sudden they get a check for $500,000 or $1 million. And in a couple of years, they blow through all that money and they have nothing to show for it. Well, with reverse mortgages, you can get a big chunk of money. And you do have to exercise responsibility, because you are using a part of your wealth, your home equity wealth, to become a financial asset, and you want to be responsible with that. So if you get nothing out of today except this is something that's really, really important. So listen closely to this. If you have a house that has increased in value substantially, and you've owned it for a long, long time, and you sell that house, the chances are you're going to have really significant capital gains on the sale of the house. And there's one of the examples of the loans I've done at the end of this is for a lady in Atherton who, if she sold her house, she would be paying over $1 million in capital gains on the sale of the house. But by being able to stay in the house, which is what she wants and what I think a lot of us want, and having the house go into the estate, there's a stepped up basis on the house and there are no capital gains. So one consideration that a lot of investment people think about is, can you stay in the house? Can you not have to pay capital gains on the sale of the house? Another thing that investment managers think about is diversification. And just like, the old adage with real estate, location, location, location is like the number one sort of rule of thumb. In investments is diversification. You don't want to have all your eggs in one basket. Studies have been done by the United States government on people that are over 60 years old. And what they find is that the vast storage of wealth in older people is in their home equity. If you think about that, that is all your eggs in one basket. That is especially true in high-priced areas for older people in California. So is that a safe place to be? Not really. A lot of investment managers recommend a 3-bucket strategy where you have one bucket is your cash that handles your needs for the next few years, your investments that hopefully continue to grow, and your home equity. And you don't want to have all your assets in just one of those. So why do people get reverse mortgages? There are a whole variety of reasons. One big one is in-home care. If you want to age in your house and not go into a facility to be taken care of, to be able to afford in-home care, it takes a lot of money. A reverse mortgage is terrific for that. As people get older, a lot of times when I do a mortgage on a house, I find that there's a lot of deferred equity. And there's a number of reasons for that, but reverse mortgage is great to put a new roof on a house, to update the house, to make it safer, so forth. A lot of the mortgages that I've done initially have helped to pay off an existing mortgage. And when somebody goes from earning an income to having a pension or Social Security or whatever, all of a sudden that mortgage becomes pretty onerous. So paying off a mortgage, paying off debts and supplementing income is a big deal for people taking out reverse mortgages. Now, you don't have to be destitute to take out a reverse mortgage. That is one of the myths of reverse mortgages is you have to be poor. You'll see in a minute when I talk about another one of my clients that they just took out $1.7 million to have greater enjoyment in life. On a more serious note, a number of mortgages were done to enable disabled family members to remain in a house and support the household. And finally, just about everybody that does a mortgage says that there's a great financial relief. There's one client that I had who was a high-level manager at worked for the Hyatt Corporation. And he used to have breakfast with Jimmy Hoffa every week because he was involved in the union side of things. And he has a nice house in Carmel, and his wife died. She had cancer, and 5 years later, he was pretty much broke. And he told me that he used to wake up every night with his heart palpitating, and he was worried he was going to have a heart attack. Getting a reverse mortgage on his home enabled him to put about $400,000 in the bank that would carry him through with his pension for the rest of his life. And he said he never woke up again. He said, I really believe that putting the mortgage on my house saved my life. And some examples of people, going back to that myth, you don't have to be poor to do a reverse mortgage. And also getting back to that financial thing where you don't want to have all your eggs in one basket. So Gert is 96 years old, and she has a house in Atherton that's probably worth about $6 million. She had about $100,000 left, and she needed in-home care. So by putting the mortgage on the house, getting $2 million equity line, she was obviously able to afford care for the rest of her life. But also, if she stays in that house until she passes away, which is her plan, she will avoid paying over $1 million on capital gains when that house goes into her estate as opposed to selling her house. Then I have a doctor in Portola Valley that took out a reverse mortgage to add a substantial amount of money to his investment account so that he could continue to travel around the world and stay in nice places. So again, an example of someone that just wanted to make their life better. Another person that I did a mortgage for, Ms. Garcia in Half Moon Bay, was 102 when she took out her mortgage. Her daughter had been living with her for the past 4 or 5 years and taking care of her. Her daughter was in her 70s, and her daughter was tired, just plumb tired. By putting the mortgage on the house, it gave her daughter an opportunity to have caregivers come in and help her. And Ms. Garcia lived another 3 years. I saw her obituary in the Half Moon Bay Review about 3 months ago. She died at 105. Kind of to sum it up, I would say reverse mortgages are not for everybody, but they're really something that more people should consider because of they're an opportunity for people to address a lot of the issues that happen as we get older. I'm 69 years old. I want to see you be as happy as possible. And for some people, that means having more money to bring in home care, means having more money to travel, means having more money to take pressures off kids. I think reverse mortgage is something that people should have an open mind about, talk to their family about, and talk to their financial advisor about, and a person knowledgeable about reverse mortgages, because the financial advisors are not always up to speed on that. So that's about all I have to say, and I think I'm going to turn it over to, I think, Jeanette, who's going to turn it over to the panelists.
Thank you, Rick. This is a lot to absorb, that's for sure.
Yeah, I'm sorry if there's too much information and if it's too confusing.
No, it's great. It's great. And I just want to remind people that if you have questions, put them in the chat, which is the little chat icon at the bottom, because we'll have time for Rick to kind of go over some of these things. But now let's hear.
Jeanette, yeah, also just if you want, when you put this up on the YouTube or whatever, if you want to put my email in there, people are welcome to email me questions anytime. I'm happy to answer them. So
wow, that's huge. And we'll let Jessica know that.
Okay.
And so now let's hear from our panelists. Shirley Jowl is a Ashby Village member, and she wanted to have a few things to say.
Hi, can you hear me? Am I clear?
Yes.
Yeah, okay. Yeah, I'm really glad that to have this opportunity. I don't want to give out too much information. I have a duplex and I have had a reverse mortgage for about 12 years. I've been through several ups and downs with it, and I am surprised how much misinformation there is still out on reverse mortgages. When reverse mortgages started in the 90s, they were not good, and the big banks took them out and people lost money on it. Since then, HUD has taken it over, and I really emphasize that you cannot even take out a reverse mortgage without 1 hour counseling from a credit person to make sure that you understand exactly what it is. I just refinanced my reverse mortgage in January because my house had increased in value so much. And the person that I used, and I got his permission to give you his name, is David Chee, Chee. His phone number is 1-800-967-3575. He is local to Berkeley, and he has been doing this locally for many years. When I had a problem with my previous reverse mortgage company, he gave me good advice free, even though I was not going to pay him anything. So he really is an honest person right here in Berkeley. And I also want to emphasize that there's a lot of good information on AARP website about reverse mortgage. And they recently did an article on why older people should consider reverse mortgage. So I'm really pleased that we're bringing this to Ashby Village members and other people. If you would like to talk to me personally, that's fine. I've had a lot of experience and I know quite a lot. And incidentally, Rick, I actually learned 2 or 3 new things through your talk. So thank you. So anyway, my number is 510-525-7012. And the reason I have a reverse mortgage is I have an income increase because I have a duplex and I rent out the other apartment. This also means that I cannot move out of my duplex and move somewhere else like senior living, but I have to sell the house when I leave it. So my plan is, and we all know what plans mean these days, is to have in-home care. And that would be able so that when I leave the duplex and it is sold, then I also want to make clear that the banks do not get the whole amount. The bank, you pay the bank off the amount that you owe, and the rest of the money is for your heirs or for charity. Whatever you want to leave the rest of the money to, it belongs to you and your trust. Does not go to the bank, which it did in the original system, which is why it got such a bad reputation. So that's my story. And as I say, certainly lots of information out there on AARP, and take your time and think about what you want to use the money for. And Rick, your information was really right on, and I appreciate it. The other thing I just wanted to say about Rick's presentation is a number of people who do not have a mortgage have asked me if they can have a reverse mortgage, and I was not clear. But it is clear to me now that even if your mortgage is paid off and you own your house, you can look into a reverse mortgage. So thank you very much, and on to the next person.
Hi, I'm Judith Coates, and I'm also a member of Ashby Village. I retired in 2012, and I'm one of these people that had worked all over the place and never worked anywhere long enough to have a pension. So I was facing retirement with very little income, but I had a house. And so I looked into reverse mortgage, and it was probably the best financial decision I've made since actually buying the house. I had a mortgage on my house at the time I retired, so the reverse mortgage paid off the balance of that mortgage. It enabled me, as Rick said, to take out a lump sum, most of which I then put into my retirement fund, 401k, etc., and also to have a credit line available for expenses or home repairs or whatever. I mean, whatever you want to use it for. I have refinanced the mortgage once, and that was in 2019. And one of the main reasons I did that was to help my daughter, who lives overseas, and her family to buy a house there. So thanks to the reverse mortgage, now there are 2 houses that are in the family. That was one of my real hesitations about the reverse mortgage when I first considered it, was knowing that I would be taking value out of what is really my only asset to pass on to my kids. But now that I've enabled my daughter to buy her own house, and my son and his wife, who live in the Bay Area, also own a house, and they're doing well. So they don't really, they're not counting on me to kick the bucket and leave them a bunch of money, thank heaven. So so that was reassuring. My son at first was like, oh, the house. And I said, okay, well, let's look at it, realistically. If I live as long as I probably will, you'll be at least in your 60s by the time I'm not here. Are you really going to want to move into this house at that point? And he was like, no. So that kind of helped make it easier. And basically both my kids were like, do what you need to do to take care of yourself. So I really appreciated that. It's ironic, actually, that this presentation is happening right now because I have been in the process. I congratulate Shirley because she refinanced in January, which was very smart. And I started the process of refinancing. It's taken a while. And of course, the interest rates have gone up. And so my timing was not good. And apparently a program, which I guess, Rick, you could explain more about this. There is a program called Jumbo Reverse Mortgages, which is to cover large amounts such as our homes in California tend to be worth. And apparently that program has been suspended. And so right now things are up in the air. So I don't know, because it is risky, because the interest rates have gone up and supposedly the housing market is cooling. Apparently the lenders wanted to kind of pause things and, evaluate the risk of the loan. So I'm still in the middle of wanting to refinance. And my main reason for that was to expand a credit line so that I have funds that are liquid and easily accessible in case of emergencies or home repairs or need for home assistance or whatever comes up. So I'm hoping within the next week to know what's going to happen with that. But as I say, overall, I have been very pleased. It really made the difference in my being able to have a retirement. And I too would be happy to recommend the mortgage broker that I worked with. I actually found him out of a newspaper article which said that he was giving a presentation on reverse mortgages to a senior group. He also later came and gave a presentation to North Oakland Village when we were still a separate village about reverse mortgages for seniors. His office is Signet Mortgage. It's located in Walnut Creek, and I will put his information in the chat to be available. So I'd be happy to answer any questions, but on to the next presenter.
Hello, I'm Terry Plank. As Rick mentioned, he helped me to refinance. We financed about 6 years ago, something like that, and refinanced last year just before. Well, I guess it wasn't last year, but we were able to do it before all of the interest started increasing recently. So we've had it over a year. But my situation is pretty much the same as Judith's. I have a minimal income because I work for myself in various variety of ways that I don't have a retirement income. And we want to stay in our community because this is where all of our friends and relationships and life is. We've lived here in Moss Beach for about 43 years, and we'd like to stay here. We don't have a large house to sell, to refinance, to downsize. We have a nice small house in the first place. So we don't need to downsize, but we did need some additional monthly income. I'm 80 and I retired when I was about 75, somewhere along in there. So the savings is rather minimal and it drains each year. So the way I've set it up, as Rick mentioned, is I receive an amount each month, which I can then add to my Social Security and to another side job I have performing weddings. So between those four resources, including the savings, we are able to make all of our payments, and we're able to do all of the same types of things that we've done in the past. in terms of vacations. We could have limited all of the experiences of camping and Ashland, Oregon Festival, those types of things if we had needed to. But by doing a reverse mortgage, that allows us to keep the basic current lifestyle, whatever lifestyle we can handle it with COVID and being in your 80s, as you're all probably aware of what that issues are about. But the importance then for me is it allows me to stay in my home. It allows me to have an income. And then it also allows, we arranged for the credit line process as well. So there's a certain credit line that's available at about a third of the out of the whole loan. There is about 2/3 of it that's available to be able to be used. About a third of it you can never use. It will always has to remain. So it caps. But within that third that we have out there, about 25% is you can just get immediately. So if there's a certain capped amount that I can simply send in a form, and in a couple of weeks a check will come. I have to go through a lot of waiting period, a lot of messing around. Like if I had a water heater went and didn't feel like I had enough money to pay for the water heater, and the car that got messed up by all the thing exploding, I can just fill in my form and money will come back. Now that caps off at a certain point, that after that, then I need to apply. It's not like they're going to not let me do it, but I can't do it on an immediate basis. So I think that's probably all I need to say, and leave more time for questions. Thank you.
So Rick, you want to address any of the things you just heard before we go to the questions with Sigrid?
No, but I was looking at the questions. I could just run down the questions and answer them one at a time if you want.
Well, why don't you let Sigrid do it, because that's what she's so good at, and that way she'll group things for you too. So that takes the pressure off you, Rick.
Okay, I just a couple things. One with Terry. I told the panel this the other day, but I just tell everybody else. Terry married me 30 years ago. He was a pastor, and he was recommended by the San Benito house where we were getting married. He did a really good job, and then I didn't see him for like 25 years, and saw him a couple of times at Village of the Coast, didn't know who he was, and then finally it dawned on me, this is the guy that married me. And he, when we refinanced, he was talking about interest rates. Interest rates are a lot higher right now, and timing is sort of everything. Maybe a good time, maybe not so much. He got the lowest interest rate that I have ever seen in 30 years of doing mortgages. So he did something right, because somebody's looking down on him and doing the right thing by him.
Yeah. Thank you, Rick. Thank you to you and the panelists. And actually, Rick, if you would like to read the questions yourself and answer, that's fine with me. It's interesting to me to listen, so.
Sure. Okay. So the first question that comes up is, what would happen if you had a medical situation that requires you to leave your house for assisted living, skilled nursing? And really good question. That would trigger the due on sale clause if you are out of the house for more than a year. You have to sign a statement that comes in the mail each year stating that you are still a resident of the house. Okay? So the loan has to be paid off, house sold or whatever, if you're going to be gone for more than a year. Second question. Sounds like one wouldn't need insurance, earthquake insurance, if there was a reverse mortgage in place. Yeah, that's a very good question, because once you got the money from if you took a lump sum from the reverse mortgage company, you are right, you are only on the hook for whatever your house could be sold for. And if it was completely wiped out and you got a lot of money for a reverse mortgage, the lender would be the one that takes the loss. They couldn't come back and sue you because this is a non-recourse loan. Okay. There's another thing too. There's a question here on equity lines, but it sort of relates to this last question. When I was doing loans, I started doing loans 30 years ago, and for the first 20 years, it was just regular loans, no reverse mortgages. And a lot of the clients that had equity lines in 2009, those equity lines were frozen. I don't know if any of you had equity lines, but people that were counting on equity lines for whatever reason, those lines were frozen by Chase, by Citibank, by Bank of America. You couldn't draw on your equity line anymore. If you needed the money, you were screwed. With a reverse mortgage, that's not the case. When you take out an equity line, you have a contract, you've signed a contract, your line will never get frozen. So that equity line from a bank is cheaper, but it doesn't have quite the security that it does from the reverse mortgage. Can you leave the house to your heirs? So big myth is that one of our panelists so adroitly addressed is a reverse mortgage is a loan, just like a 30-year fixed, just like an equity line. When that loan is paid off, that loan is paid off and there's no more lien on the house. So yes, you can leave your house to your heirs. The loan has to be paid off. If they have the wherewithal to pay the loan off, then they get the house. If they don't, and they sell the house, whatever is owed gets paid off, and the equity that remains, they inherit the value of the equity that remains. If you've depleted your equity and have to move to a retirement setting, would there be funds to do so? The way these loans are set up, as mentioned before, because they're non-recourse loans, the formulas that the lenders use are such that they do not anticipate your loan ever being greater than the value of your house. It would take real extreme circumstances for that to be the case. So yes, if you had to move somewhere, usually there would be equity in your house after you sold your house. 4 basic mortgages, 2 that are credit line without mortgage insurance, added the interest mortgage insurance, 2 with a credit line. Is this still the same or did they change over the past few years? I think, is the question 4 basic reverse mortgages? If that's the question, so there are 2 classifications of reverse mortgages. There are FHA insured reverse mortgages, which is the traditional reverse mortgage, and all of those have mortgage insurance. When they add interest to your principal every month, there's a little component of that is also mortgage insurance. The jumbo loans do not have mortgage insurance. They do have a higher interest rate though. But they also will give you more money with the jumbo loan. So there's sort of pros and cons of each. So I guess the short answer, credit line, FHA insured, it's going to have mortgage insurance. Those are smaller loans that are available. Jumbo loan, credit line will not have mortgage insurance. Use chat for questions. What about refi? So any refinance, any reverse mortgage, you can look at a refinance, and whether it's beneficial or not depends on a lot of different factors. But because values have gone up so much in the last few years, If somebody specifically just wants more money to available, then a refinance may be beneficial. If they're looking for a better interest rate, probably not going to get a better interest rate, because the last few years have been much better interest rate wise than what you're seeing right now. For whom are reverse mortgages not appropriate? I would say, so I did all kinds of mortgages, and I've probably done 2,200 mortgages now in my life. If you, the circumstances, that's a really hard question to answer. I would say, as an equity line, for example, if you can qualify for an equity line from a bank without doing a reverse mortgage, just a regular equity line, probably more appropriate to do a regular equity line because it's a lot cheaper. If a reverse mortgage can help you have a better life, then it's appropriate. I'll just put it that way. If it makes you happier, if it gives you more money to do things, if it takes, allows you to stay in the house and have health care, any of those things you would know, and then I think it's appropriate. Let's see. Why do this is Emily. Hi, Emily. Why do I continually receive ads to refinance my reverse mortgage saying I will be able to get more money? Probably because the value of your house has gone up some. But Emily is a friend of mine, and I did her mortgage, and I can tell her that if it was possible to get more money, the interest rate that she would get would be a lot higher than what she has, and it would eat up her equity much faster than it is now. So I would say just put those in the trash can, Emily. Okay. Could you say more about the difference between an equity line and a reverse mortgage, and which may be better for a retired person with a paid off home? Okay. So you have to qualify from a bank for an equity line. And a lot of people don't have the income for the debt to income ratios to be correct to be able to borrow for an equity line from a bank. So I would say that may not be possible. If it is possible, you're going to get cheaper money from a bank equity line, but you're going to have to make a payment every month, whereas you don't with a reverse mortgage equity line. And your reverse mortgage equity line won't get frozen, which can happen with a regular bank equity line. So there's kind of, pros and cons of both. And I would just say, talk to a financial person that could help you kind of work that out. How are capital gains calculated on the property aspect of the estate when the owner sells a house? Have to pay. Okay, so capital gains on an estate. If your house goes into your estate, right now in California or federal government, I think you can pass $11.5 million in an estate without it being taxed. So it doesn't matter how much your house is appreciated. If it's part of your estate and your estate is worth $11.5 million, all that goes to your heirs tax-free. If you sell the house, my mom sold her house for $2.5 million and then moved into a place and paid $750,000 in taxes, capital gains taxes. That's the problem with selling your house as opposed to leaving it in your estate. If you can leave it in the estate, it's a much better way to go. This is a really great question from Judith. Why does the world know when we have reverse mortgages? I've been besieged with pleas to refinance for months, though not the last few weeks. So anytime you do a mortgage, you have a deed of trust that gets recorded. So that's a public records instrument. And so it doesn't matter whether you're doing a reverse mortgage, a regular mortgage, whether you're buying a house, any of those things results in a deed of trust that gets recorded, that becomes visible to anybody that wants to telemarket you or besiege you with written materials and solicitations. And that's why you get all that stuff. It's also a historical thing. So somebody can go back and target people that did reverse mortgages 3-4 years ago because they know that housing prices have increased so much and solicit you with a letter. Okay, good question, Rebecca. What is the percentage of home equity that can actually be tapped? So, as I mentioned before, there are two classifications. There's the FHA insured loan and the jumbo loans. The FHA insured loans have a cap on what they'll value your house at. The jumbo loans don't. They take current appraisals. So you'll get more money generally out of a jumbo loan if you have a high value loan. Then it becomes a function of your age. And I know one of our panelists was mentioning the problems that she's having with her jumbo loan right now because in the last couple of months, it's been kind of a mess because interest rates have gone up so fast and property values maybe are on the brink of coming down some. Lenders have backed away a little bit from the formulas that they were using before. But I can say based on prior formulas, if you were 75 years old, you could get maybe 55% of the value of your house. If you were 80 years old, you might be able to get 70% of the value of your house in terms of a loan. All depends on a formula. And I think that's all the questions that I see up there.
So you could actually get more if you were older? That seems counterintuitive.
It's not because, as I'd mentioned, you keep that loan as long as you're in the house, right? So there's more risk to the lender. If you're 62 years old and you get a loan, you could live 30 more years in that house. If you're 95, like my client Gert was, they're going to give her a big percentage because they don't expect her to live, it all goes to the longevity tables. So that's why.
I joked that my best revenge was to live so long that my loan would be underwater. Ha ha, sock it to the finance.
Yeah, well, see, they're not going to allow that, so it probably won't. I mean, they just
kill me off.
the way they calculate things, it's likely that you'll have stuff to leave your heirs.
Just add a couple of thoughts. Just an example, I'm looking at my bill and basically my house is worth about $1 million in Moss Beach, and my principal growth that I can draw out on it is about 500,000. So on my particular one, it's about half the value of the house remains, and the other half I can draw up, like I mentioned, either a smaller amount immediately or the longer amount by applying. The other thing, just to encourage you, is that a lot of issues that we face are psychological when we come to looking at these loans. Like each time I get my statement, my wife Pat does not want to look at it. She says, you use it, because at each time it's helpful for me to just remind myself, why is my mortgage higher than it was last month, and it went up by this month, X, Y, and Z. And each time I just simply remind myself about why I did it. I did it because I want to stay in my home rather than living in some community that I don't want to be in and know no one. And fortunately, my daughters do not, quote, need a large income, but I have to remind myself of that too, that they will not receive the same kind of inheritance as they would if I was staying in my home. But my daughters, I'm fortunate, are loving and caring, and for them, they would rather see us happy and living happy, fulfilled lives where we live than to have a bunch of money with us dead. So there was two other thoughts I had.
You know, we have a couple of more questions that have just come in that are kind of interesting.
Okay. If I want to use the value in my home to get into a retirement facility, what is the best way to structure the sale or mortgage? So, like my mom sold her house to move to a retirement facility and unfortunately incurred the capital gains on the house. If you need the funds from the equity in your house to do that, then I guess you have to sell your house. Or if it doesn't take all that money, you know, there's a possibility you could put a traditional mortgage on the house and use that money to get into the retirement community and rent your house out. But you can't put a reverse mortgage on and then move because you have that 12-month requirement. I hope that answers your question. Is all this, okay, great question. Is all of this information the same for condos? Whew. So with condos, some condos are approved for FHA loans. This is what it boils down to. When a condo is built, they go through an approval process and they have to satisfy a bunch of requirements for HUD, and then they get approved to be FHA approved condos. In that case, no problem. If they're not, then, in which a lot of condos that go through the approval process when they're built, and then they let it lapse. And because it takes a lot of work and it takes money. So older condos, most of them are not approved for FHA. You can still get a reverse mortgage on them, but you have to run through some additional questionnaires and they, you know, have to meet certain requirements. So that's the answer to that. Is there a limit to how much you can get from the house? If so, what is the limit? I'm not sure if I understand that question. Is there a limit to how much you can get from the house? Are you talking about in terms of a limit on the size of the mortgage? If that's the question, and you're doing a jumbo loan, you're only limited by your age and the value of the house. And then it goes into a formula. So like a previous example, if you're 75 years old and your house is worth whatever, you may be able to get 60%, something like that, of the value of your house, up to $4 million. $4 million is the most I've seen on a jumbo loan. Is there a cap on the amount of money allowed for reverse mortgage as there was at the beginning of the program? If so, what are those caps? Is there a cap on the amount of money allowed? I think that's like the same question. So $4 million is the cap if you have a really substantial house.
So I think that we're still trying to make sure everybody puts their questions into the chat icon. It might be that the audience sees a question and answer icon. We're using the chat. Trying to get a few more questions in here, but while we're doing that, I just want to mention that Ashby Village is happy to present interesting programs free of charge like this one, so that they're accessible to everyone. If you're able to support our ability to offer free programs, we invite you to donate to Ashby Village, and a link to do so will be in the chat. Or you can simply go to ashbyvillage.org, read our website, and you'll see a place to donate there. I think there is another, no, I guess there is another question. So unless there's any more that the panelists can say, or any more that you have, Rick?
Well, somebody just, so they added to the question, so $4 million is the most you can get for any house. And at least with the lenders I worked with, that was my understanding.
All right. Well, listen, thank you so much. This was really informative, and I think it's given a lot of people a lot of things to think about.
I hope so, because like I said, there's been a lot of myths that kind of aren't really true anymore, or maybe were never true, but it just something to go into with an open mind, and some good financial people to talk about it with.
Yeah, I'm especially interested in the whole capital gains aspect of that going away. So anyway, I think we'll end it there.
I had a question just as you said that though, Jeanette.
Yeah.
For Rick, I was wondering. So for someone who doesn't really need income or whatever, I guess what I'm saying is, would it be worth it to just get a reverse mortgage in order to avoid the capital gains?
Yes. I mean, if you want to stay in that, if you're going to stay in that house, I think the answer is yes, rather than have to sell the house that's, in the last couple of years of your life. Absolutely.
Thanks.
Terry, one thing you were talking about too that I didn't really mention in my presentation, but people really should give some thought to, and that is when they see their equity disappearing, they know they're losing some net worth there. If it wasn't happening on that end, it would be happening on another end where they're taking their savings and using their savings to support their requirements, as opposed to using the equity from their house. It's all part of your net worth. It's just a question of whether it comes out of that equity bucket or whether it comes out of your savings and investment bucket, if that makes sense.
That's an excellent sense, because we make the choice. We have, when we have a water heater that needs to be replaced or a roof that needs to be replaced, I don't have generating income to do that, but I have a choice. I can choose to take it out of the equity loan, or I can take it out of the savings.
Correct.
Now, if I take it out of the equity line, I'm going to be paying interest though the rest of my life.
Right.
Or if I take it out of the savings, I'm going to be losing what interest I would have gained for the rest of my life. So it's a balancing between,
right,
it costs me more to pay 4% for the rest of my life, or to lose 4% of whatever interest I might have been making on leaving the money over in the savings account.
right.
Well, thank you.
We
Yeah.
don't want to let Rick go, do we?
You're welcome to email me any questions or whatever. I put my email up there, and if, like I say, I don't have any financial agenda here, but I've spent 30 years doing loans and have accumulated a lot of knowledge. So if I can somehow share it with somebody and it helps them out, I'm totally happy to do that.
Well, thank you, Rick. Thank you so much for all your information. I know it was a lot of information, and so all of you who attended, this has been recorded and it will be available on the YouTube channel so in about a day. So please visit our website, the ashbyvillage.org website, and there's a YouTube button. It's red in the upper right-hand corner, and that will take us to all the recordings. And thank you, Jeanette, Judith, Sigrid, Terry, Shirley for joining us as well. It's all really useful information. And I'd like to just wish everybody a great rest of their day.
Thanks, Jessica.
Thank you. Bye.